Hey guys, this is the Investment Venturer and welcome to the Investor Next Door podcast. Today we'll be doing a breakdown of the cryptocurrency, Ethereum, and diving into the reasons for its recent run-up. I should let you guys know that anything said on this podcast should be used for information and entertainment purposes only. This is not investment advice, and I do not recommend diving into any project or trying any strategy without doing your own research first. What is Ethereum? Ethereum is an open-source, decentralized blockchain platform designed for programmable smart contracts and decentralized applications, dApps. Unlike Bitcoin, which mainly focuses on being a digital currency, Ethereum acts like a global decentralized computer where anyone can deploy code that runs exactly as programmed. Core components: Ethereum blockchain, a distributed ledger maintained by a global network of nodes. Every transaction and smart contract execution is recorded here. Uses account-based model, not UTXO like Bitcoin. Ether, ETH, the native cryptocurrency of Ethereum. Used to pay transaction fees, called gas, incentivize validators, post-merge, serve as collateral in DeFi, enable staking, smart contracts, self-executing code stored on the blockchain, written in languages like Solidity or Viper, executes deterministically without human intervention. Ethereum Virtual Machine, EVM. The environment that executes smart contracts. Every node runs the EVM, ensuring consistent results. Makes Ethereum Turing complete, can handle almost any computation. How Ethereum works. User submits transaction, sent to network, validated and executed by the EVM. Gas measures computation required, paid in ETH and consensus. Originally proof of work, POW, as of the merge, September 15, 2022. Proof of stake, POS. Validators stake 32 ETH to propose and validate blocks. Earn rewards for honest participation. Ethereum 2.0 and scalability upgrade. The merge. In September 2022, Ethereum underwent its most significant change since launch. It moved from proof of work, POW, to proof of stake, POS. This eliminated energy-intensive mining, cutting Ethereum's energy usage by about 99.95%. Instead of miners competing with computing power, validators now secure the network by staking 32 ETH and are randomly chosen to propose blocks. This shift didn't directly make Ethereum faster or cheaper, but it laid the foundation for future scalability improvements. Shanghai Capella upgrade. Completed in April 2023, this upgrade focused on staking flexibility. Validators can now withdraw staked ETH, something not possible before. This made staking more accessible and reduced the risk for participants, leading to more ETH being staked over time. It also improved Ethereum's consensus layer efficiency and reduced some operational frictions. Proto-danksharding, EIP 4844. Planned for the Denken upgrade in 2024, Proto-danksharding is a major step towards scaling Ethereum for mass adoption. It introduces blobs, large chunks of temporary data stored more efficiently than normal transactions. These blobs are especially useful for Layer 2 rollups like Arbitrum, Optimism, and ZK Sync, as they can store transaction data much more cheaply. This should significantly reduce fees on L2 networks, making Ethereum-based apps more affordable to use. Full danksharding, future goal. The long-term vision for Ethereum scalability is full danksharding. This will divide Ethereum into multiple shards, parallel blockchains that all connect back to the main chain. By processing data in parallel, Ethereum could potentially handle 100,000 plus transactions per second. This would turn Ethereum into a true global-scale computing platform supporting billions of users without congestion. ecosystem and use cases. Ethereum supports the largest decentralized app ecosystem. DeFi, decentralized finance, lending, borrowing, trading, Aave, Uniswap compound. NFTs, digital ownership of art, collectibles, OpenSea, Blur. DAOs, decentralized governance, stablecoins, USDC, DAI run heavily on Ethereum, gaming and metaverse, on-chain items and worlds. Layer 2. Solutions, Arbitrum, Optimism, zkSync for lower fees. Strengths. First mover advantage in programmable blockchain space. Massive developer and user community, highly secure and decentralized, continuous upgrades to improve scalability. Challenges. Scalability being addressed with L2 and sharding. High gas fees during network congestion, competition from newer blockchains, Solana, Avalanche, etc. Regulatory uncertainty in certain jurisdictions. Investment perspective. ETH as an asset. Required for gas, staking, DeFi participation. Staking yields 3 to 6% annually for validators, lower for liquid staking. Deflationary mechanics. EIP 1559 burns. Part of transaction fees, reducing supply when activity is high. Long-term bet. If Ethereum becomes the base layer of global decentralized computing, ETH demand could rise significantly. Recently, we have seen Ethereum up almost 50% in the past month. Let's discuss why this is happening. Institutional inflows and ETF momentum. Spot Ethereum ETF inflows have surged, with daily injections hitting up to $727 million and total inflows exceeding $2 billion since early July. Analysts highlight that ETFs like BlackRock's ETH are drawing investor attention, suggesting Ethereum is becoming a mainstream crypto asset. On-chain data shows Ethereum supply on exchanges is at an 8-year low, while whale accumulation continues. Macro tailwinds and market sentiment. Easing inflation, with May's CPI at 2.4%, has raised expectations for future interest rate cuts, making risk assets like ETH attractive. U.S. policy moves, such as a Trump executive order allowing crypto in 401k retirement plans and a revived stablecoin regulatory framework, have boosted confidence. Ethereum, which powers many stablecoins, stands to benefit. Regulatory developments under Project Crypto, favorable U.S. stablecoin policy, and improved DeFi clarity are also strengthening Ethereum's outlook. Strong fundamentals and ecosystem activity. Ethereum continues to lead in DeFi, holding approximately 60% of TVL, stablecoin volume, and real-world asset tokenization. Address growth is booming. Unique Ethereum addresses hit an all-time high of 17.4 million, with a 70% jump in Q2 2025, mainly driven by Layer 2s like Base. Over $2 billion in stablecoin liquidity flowed into Ethereum in a single week, a testament to its continued dominance as a financial hub. Technical upgrades and staking developments. The Pectra upgrade, launched in May 2025, boosted network performance, doubling blob transaction capacity, enabling stablecoin gas payments and raising validator limits up to 2,048 ETH. Staking continues to lock up more ETH. About 29 to 30% of circulating supply is now staked, reducing available market supply even further. Planned staking functionality in Ethereum ETFs may further attract inflows, reinforcing the Internet bond narrative. Technical and on-chain momentum. Key on-chain metrics like low SOPR, spent output profit ratio, and MVRV indicate low profit-taking and possible undervaluation, suggesting room for continued upside. Price patterns such as a bull flag, combined with strong contract deployment and stablecoin inflows, hint at a breakout toward 4,000 plus, Some optimistic forecasts even point to $5,000 or more. Conclusion: year to date, since January 1st, 2025, ETH has appreciated roughly 27% to 27.5%. Year on year versus August 2024, ETH is up around 64% over the past 12 months. Could ETH reach $5,000? Here's what recent expert analysis and market trends reveal about Ethereum's potential to climb to $5,000. Bullish indicators and momentum. Crypto News notes that ETH has surged over 22% in the past week, with renewed retail and institutional interest pointing toward a $5,000 target. Analysts at BN Crypto observed that a breakout and sustained hold above $4,000 could pave the way toward revisiting its all-time high near $4,827, a step toward $5,000. CoinDCX highlights that maintaining momentum and clearing $4,000 could open the path to the $4,500 to $5,000 range. Coinpedia reports ETH has already moved past $4,200, reinforcing speculation that a new all-time high may be just days away. Tribune India points to institutional inflows, the rollout of Pectra upgrades, and technical setups as key drivers pushing ETH toward the 5,000 to 6,200 range. Macro and structural tailwinds. MarketWatch, via the news section, emphasizes Ethereum's central role in DeFi and stablecoins, holding dominant shares, along with regulatory clarity, Project Crypto, and ongoing ETF inflows as significant momentum drivers, hinting at a possible push toward its all-time high at 4,865 and beyond. A prior analysis from MarketWatch, December 2024, also forecasted that given sustained demand and supply trends, including ETF activity and supply burn dynamics, Ethereum could surpass $5,000 the following year. Short-term, a breach and hold above the 4,200 to 4,300 zone could accelerate the run toward $5,000. Medium-term, institutional capital and upgrades like Pectra could sustain upward pressure into the $5,000 to $6,200 range. Risks: momentum shifts or macroeconomic downside could halt or reverse the trend. That's all for today, folks. Thank you for listening to my podcast. Be sure to subscribe to the Investor Next Door podcast on your favorite podcast listener. If you're watching on YouTube, be sure to like and subscribe for future episodes. Follow me on social media to stay updated. Twitter X at InvestNDPod. Instagram at InvestNDPod. Hi, share this episode with your friends if you've learned something valuable from this podcast, and I'll see you guys next.